The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more do we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
And what do we have? Well, lots of earnings, a few earnings after the bell. We'll go through the ones that reported last night and this morning. Some kind of interesting action, and we'll talk about why that is. And what do we have? And we'll talk about the earnings coming out tonight, tomorrow morning. I don't suspect much is going on. As I told you Friday, I covered my short positions for the most part, left a couple of them on. Won a lotto ticket, one that I just really like long term. And we'll see. At least one of them is starting to pay off fairly good. The other one's a lotto ticket for Friday. So we'll see. But I don't have much in the way of exposure now. But I was looking, as I said, on Friday and yesterday for a kind of sideways market. We're parked at the what I'm going to call the Great War of 2555, or should I call it 2557 or 2556? We'll have a vote in the den to call it, but apparently there is a line in the sand, and that line is somewhere right around here, 2555, a little bit higher to 2558. And why no one wants to buy any higher than that, no one wants to sell any lower than that, and we are back into the doldrums that we've seen many times over the last year or so. And that is when we're, at least for earnings, way over the tips of our skis. The question is whether or not something's going to happen to make earnings even better. But we'll talk about that. A lot of very strange action in the markets, and we'll talk about that too. So what do we have right now? Well, the S&P's off a little less than 2 points. The Dow's at up 17 points. NASDAQ's off 6.5. Crude oil's off 30 cents. The dollar was up a little earlier when I looked. What is it? Up 26 cents at 73.40. And that's pretty much it. We're going to get into a little history in a market that's trending sideways. And we'll talk the history, then we'll look at some charts. See if there's anything we can divine in a market that seems like we should poke it with a sharp stick and see if it moves. But I do digress.
That it's all just a little bit of history repeating.
It is history repeating, and on this day in 1933, liquor and wine is illegal in the United States unless it's radioactive. Yes, when tested, drinking alcohol is required to have at least 400 radioactive decays per minute for each 750 milliliters. This came at the end of Prohibition, and one of the reasons why is most people don't know that you can make liquor out of crude oil and other oils, but mostly crude oils. And it's very easy when, with the process of making liquor out of regular oil, which is incredibly cheap, to get methanol in it, which is, of course, what killed so many people with bathtub gin in the 1920s and early 30s until Prohibition went away. So in the infinite wisdom of many people, including the farmers' lobby and the lobby for the people in the alcohol business, they wanted to keep prices up. The farmers wanted to sell grains for alcohol, so it's got to have a little bit of radioactivity in it. And of course, even you are radioactive. A banana's radioactive. Literally anything that's got carbon in it is radioactive. And the half-life is about, I think, 5,700 years plus or minus 40 years, something like that. So you can easily tell after something is deceased how old it is. And of course, if it's been made with any kind of grains, it'll have at least some radioactivity. In recent years, at least some in Russia have been trying to palm off a methanol as vodka, making it incredibly cheap from some of the mostly just stolen crude that they've found. Of course, we know the pillars of virtue that Russia is when it comes to this kind of stuff. And they try to sneak in tankers full of this stuff because it's about 1/10 the price of vodka distilled by grains. But they just put a Geiger count on it, and if it doesn't tick off a bit, they know it's not made from that. And of course, probably more problematic to try to make it radioactive after the fact, maybe more expensive, and easier to test because you'd have to get that pretty much. They take a sample every year of all grains across the different parts of the world for the United States Department of Standards, and they freeze dry these things, and they know pretty much over all the countries where it is. In fact, they can go back and take a sample of grain and figure out what part of the world it came from by various isotopes from where it came, and also radiation, because radiation leaks from a number of places. In fact, right now, Western Europe is getting a bunch of radiation, they think, from one of the countries in the Baltic region, but not sure exactly which one. It's not going to be problematic because actually there's kind of a lot of people think, well, radiation, well, it's got to kill you. Well, you get radiation every day. If you eat a banana, you get about the same radiation that you get in a 2-hour flight in a jet at altitude, somewhere around 35,000 feet. But a lot of interesting stuff going on with radiation and alcohol. But just remember, next time you have a nice wine or liquor, you're gulping down some huge radiation. I mean huge in the fact that it's not really that much. Makes you blind. Oh, yeah. Stuff like that. Tequila actually has the lowest radiation and vodka the highest. So just interesting. Okay, so what else do we have going on today? Well, I got to get to my cue. There's my cue. And we will move on.
Netflix, you're greenlit. Who am I speaking with?
Yes, hello. We have an idea for a show that we think would be great for Netflix.
Okay, great. Would you like a pilot or just go straight to an order of 6 episodes?
We'd like to go right into 6 episodes with a pickup option at the end of 3.
Got it. Can you start shooting next month?
Oh, we're going to break. We're going to talk about Netflix and the huge amount of money they're throwing, and maybe that explains the movement in their stock last night.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're off 1 point on the S&P cash. Again, I'm not looking for any kind of big movement between now and maybe Thursday. It's not uncommon, especially into expiration, but also earnings season, for the market to try to go sideways for a little while it's deciding how the market's going to react to earnings. Last night, Netflix came out, kind of a bizarre thing where it started moving, the price started moving, but at least I had two screens on. I had Bloomberg TV and I had CNBC on, not the volumes, just watching the tickers because they have a lot of tendency to show earnings, so then I can know which ones that are out, confirm they're out. Sometimes it's a strange thing. I don't get them all at the same time. Anyway, it started to run. They continued to say that the earnings weren't out. I checked on my sources for news, nothing. And, of course, about 2 minutes later, here comes the earnings, and I start seeing it. But the market kind of moved a bit. Maybe Bloomberg got the earnings a little early. Who knows? Didn't matter. I wasn't neither long nor short. But it was kind of weird. And a lot of times you get those kind of weird things. The market for that stock, especially after hours, does not kind of go the way you think. Anyway, got up to 207, 208 after hours last night, trading at 199.30 now. And I was going through the one-liners on it, and it really was kind of interesting to me just how much money they were spending for international clients. Again, the United States, kind of an easy market to get into. They went into 17 different foreign markets. We also had a discussion maybe, a month ago here on the show when we talked about, maybe it wasn't even a month ago, maybe it was a couple of weeks ago, whether or not you could scale sports on Netflix across the world. if you're going to pay money for something and you're a Netflix or Amazon, doesn't it make sense to have something that pleases all the customers around the world, or something they may watch? Maybe not something that they would watch, but something they would. Probably not going to be watching baseball. Probably not going to be watching football if you're in Ecuador. Probably going to be watching soccer. Probably the same thing if you're in Russia. I don't think they watch football. So as you get into these different ones, they're going to be spending a lot of money on content. And they've kind of looked and put their toe into football so far. And I get little alarms and things from Amazon of maybe NFL games or something. I wouldn't watch them on TV, wouldn't watch them on Amazon, either one. I'm just not a fan. So the question is, how does Netflix put all this stuff together? Right before the break, I played a little ditty from South Park last week where they were beating up on Netflix for literally having more than one original movie per week over the next coming year, actually 80 of them. And the question is, at what point do they get anything? Over the weekend, I did see one of their new, or at least part of their new series. And one of the reasons I don't have Netflix is because I would sit down and then binge watch everything. And it's tough. Anyway, I was watching the new one, Mindhunter, that had to do with the beginnings of the behavioral science unit in the FBI and serial killers and stuff. It looked pretty good. So I'm not a Netflix hater. I kind of hate the fact that, probably like an addict, I probably shouldn't be too close to those things, or my weekend would just be gone. I think we got into 4 episodes before we figured out that we started getting rooted to the couch, and had to reach escape velocity to get out before we watched all 10 episodes. So the question gets back to a couple things. On Friday, in my segment with Tom, we were talking about what happens with Netflix and how long do they have to grow and what can they spend, because it is incredibly highly valued. And a couple of the articles I read last night were kind of along the same thing, which is if they keep spending at the rate that they're spending for new content, then the numbers don't make sense. They're a $20, $40 company. If they can, in a year, start pulling back to half the levels that they're spending now on content, then the stock's worth the $200 that it's trading at today. So that's going to be a question that people are going to have to see. Would you quit seeing Netflix if they really cut back on the amount? My guess is that they're always going to be trying to walk that fine line of providing enough content so that people don't unsubscribe, and spending too much money to where people are actually doing it. Who has time to watch so much TV? Yeah, nobody does, and that's why I don't have it, because I'd probably sit down there and watch all 10 hours of that Mindhunter thing, which was very good. And, I guess the thing that hits me is, at least so far, the quality of most Netflix and Amazon things are far beyond what you get on TV. Even if you have to watch it for free, they are not that kind of quality. They're not the kind of almost movie serial business that they have. But that's it. If you're wondering why the thing was printing at 207 and it's printing under 200 now, it is the question, and that is, how long can they go and spend this kind of money and continue to spend this kind of money? And this is just on original films. This doesn't even bring up how much money they're spending on serialized things like Mindhunter that sucked me into a black hole of sitting on a couch for 4 or 5 hours. Good stuff. Can't say anything. No, I'm kind of like an alcoholic. I just can't go into a bar because I would sit down and continue to drink from the well that is Netflix. But I don't know. When you look at the chart, there's not a lot in it, but we had a lot of stocks that didn't actually kind of participate the way we should think they did. In fact, one that was really kind of interesting to me was Hog. The numbers are horrible. They say that they're going to be off 8% next year. And what did this thing do? It went and ran some shorts today. They ran a bunch of them. This thing has rolled back down to a lower level. Some people might think this thing has sold out. I just don't understand how they can say for all of next year, we're going to be down 8% and still have, this won't be a $40 stock. They weren't real clear on why they said that they were going to be down 8% in overall earnings. Again, this is a company that makes 80% of their money not selling motorcycles, but selling T-shirts and saddlebags and little tassels that hang off the handlebars, service, a lot of other parts, but not a business that sells motorcycles. A business that sells a lifestyle is what they call themselves. But that lifestyle, they're saying, is going to be down 8% next year. The reaction today seemed rather bizarre. We'll be back after this.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yes, the winner for today is Johnson & Johnson. Nice big candle out here. Would have liked to seen a little bit more volume. This thing has been around this level, which is about 136, has kind of acted as resistance. We broke through that today with 7.2 million shares. Now, maybe we'll get more before the end of the day, but certainly okay, it's going to hold up here, but it's not a rousing endorsement. Would have liked to think that we'd see 12 million shares by the end of the day. And, you got kind of, 9 million back here not too long ago. And I would have leaked, we're probably going to get that 9 million, but it just seems for such a big candle and a breakout. Let's go back here and look at a little longer time frame. Come on. So it's a long-term breakout. Just would have liked to see a little bit more. There's not that much more to say about this. It's still in an uptrend, nothing to say anything else out here. But I would not be surprised if this came back and tested its gap at 136 or 137. Certainly not on the short list, and doesn't really make a good candle out here for anything that would resemble a abandoned baby. But you never know. So let's go on to other earnings of the day. We did Hog and Netflix. Morgan Stanley, of the two, Morgan Stanley and Goldman Sachs, I thought they had the better of the two earnings. And of course, Goldman Sachs had the better of the two earnings if you didn't look at the whisper numbers. But if you did look at the whisper numbers, you can see the reason why Morgan Stanley is up and Goldman Sachs is down. We'll get to Morgan Stanley in a second. But everybody was looking for even bigger numbers that Goldman Sachs put out. Of course, the headlines will all reach blowout numbers for Goldman Sachs, but they weren't blowout enough because, again, front-running these stocks into earnings means that they have to be even better than perfect. And I can say that Goldman Sachs was probably perfect, but the stock price was way in front of it. When we look at Morgan Stanley, too, this thing kind of tried to go above the high of the 6th of October. That day had 5.2 million shares. So what do we have today? About 10 million shares, but cannot hold that high. Let's go to Goldman Sachs. This is not hitting that high. Did open up higher and immediately started to sell off. And I think if you dig into those whisper numbers, you'll find that that's the reason why. Everybody was expecting a whole lot more. And of course, everybody yelled and screamed on why you should buy it. Opened up a little higher. And of course, everybody that had dug through the numbers figured out that this was a little bit ahead of what it should be and rotated down. Question in the den. What is it? LRCX. In Lam Research, these things have been going up. I don't know. I think for the most part, these things are probably not going to do bad. But almost all of these things I've looked, the whisper numbers are basically insane. Whether it's Netflix or Goldman Sachs, everybody's literally thrown everything against the wall. Netflix had, 10 upgrades going into earnings? Same kind of thing. These things are just priced absolutely for perfection. If I was looking at these and I'd been long them for a while and trading them, I'd probably be out of it for the earnings date. No sign out here that this thing's given up, but at the same time, your risk is probably a down to 170 on this, and maybe you get to 200 on it. So I don't see the risk reward in a lot of these. One of the things I dislike is this pattern, kind of a longer pattern. Let's get this one down a little bit here. And that is you've had a couple of thrusts higher, and each one now has a lighter move from the July 3rd to the July 27th move. You had a 3.3 on my power law factor indicator number. August 3rd to September 18th, you had 2.9. So you come off about 10%. Then the September 26th to this high out here is just a 2.2. So you are getting in pretty rarefied air. I just don't understand the risk reward. I don't see a sell signal on it. But again, you got to really think that these guys blow out the highs. And just like Goldman Sachs or Netflix, everybody is basically saying these things are growing to the sky. We know that they don't. So I would say just from this business, 5 points up from here. And of course, 20 points, 25 points lower if this thing misses. So the risk reward just pretty horrible on these right now. So you're up 2 points or down 2 points. I don't see anything. I looked through a bunch of the earnings last night and today, and most of these things look like it. You're going to be up 3%, down 4 or 5%. And of course, if you wanted to play options, you really need to have a move of 10, 15% in the stock price. And I just don't see it in the charts. It may happen, but I don't see anything out there with a flag. Taiwan Semiconductor, TSM. And these things, again, same kind of thing. This one's just had kind of a run too. You've got to look at, this gap up as probably being support from the 11th of October. That had 9 million shares. So you're back down to 39.25, 39.50 on the downside if this thing whiffs. Could be worse if it's horrible, but even if it's in line, I think you could see a $2 pullback in TSM. That wouldn't be anything, wouldn't break the bull, but it would probably give a signal out here that some of these things are out here. On the positive side, could you get a buck or two higher? You could, but I think these things are in pretty rarefied air. There's just not that much higher out here, and you could see a lot lower. And if these things really would rip lower, $5-10 lower, then I would see about putting puts on as a good binary bet. But unless something really changes in the pricing of those options, they are just too expensive to beat the VIG. I mean, I should probably have a kind of segment. Beat the VIG. But not in that. Yeah, we got to go to another one. I was going to say it, but I didn't have time earlier in the segment when we were talking about alcohol and whether it had to be radioactive. But I did stumble upon an article while I was researching that today just before the show, and it was kind of interesting. But did you know that a trader moved the price of crude in 2009 by $2 all by himself because he was so blind drunk he did not know what he was doing, and he was told that he wouldn't be able to trade for 2 years. But I didn't remember that. 2009, so drunk that you moved the price of crude by $2 by yourself. I was from England, so we'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
IBM comes out after the bell tonight. Looks like an ABC down that's continued off this 181.29 high. These guys had a huge opportunity in machine learning, and I think they whiffed on that. Now they have a new opportunity coming, but it's maybe a year down the line in a new form of computer technology. The question is, can they get that out before they lose literally everything? We talked about how in machine learning they kind of lost the edge with Watson, that Amazon, Google, and Microsoft have all released open source versions of their machine learning software and pushed their on-presence. IBM's kind of stuck in the machine learning world of where you literally have to control your data. It can't go somewhere else, like on a web services platform like Amazon or Microsoft's Azure or Google's web services or even IBM's web services. So if you want to buy the hardware and the software together, and you've got to have it all at your facility, like medical issues surrounding HIPAA laws, that kind of stuff, these guys should be doing a great deal more. They kind of got up to that 181 with a bunch of announced deals with Apple and their big Apple tablet that every doctor was supposed to have instead of charts anymore. And there were a lot of issues that finally came to the end of that deal, kind of dying with a whimper without a bang. That they couldn't really, with Wi-Fi and everything else, they couldn't really figure out how to get that deal done and secure. In fact, yesterday, had a lot of people. I posted it in the Den when I saw it about 10 minutes after it came out about the vulnerabilities in Wi-Fi. And if you've got Windows updates turned on, you're already patched on the Windows side. But you've got to look at IBM, and the question is, what are people willing to hold on to it for another year until they get some of this new stuff out? Most of it will be fairly quiet because they're going to sell this stuff, the new technology that they're working on for next year in computers, to government, the NSA, that kind of stuff. And if you're a big holder of it, do you hold on to it? If you're Buffett, who's already sold 1/3 of your shares, am I going to see this Friday night another list of all the shares that he sold over the last 30 days that comes out? Kind of hard to tell. Doesn't look like this thing's been in a huge selling frenzy, but every time it's gone up a little bit, and there have been sellers there, just not enough to push the price down. If you look at this as an ABC on the way down, which I think you kind of have to right now. Maybe one more leg down. That 157, I think, is where you'd want to look. So we'll look at that as A. This is B. And that 148 is C from October 10th. So we look at that. That takes you down to 130.88 on just a 1-to-1 ABC. Does that happen now? It's hard to tell. Again, this company, because they are selling only to the largest companies, aren't really very forthcoming. But what I really dislike about this one and think that this is an ABC is just the very light move from that August 21st low up to the October 10th high of 148.95, setting up what I think is this ABC down. I think probably you have to bet on a test of 139.13. If the news is bad, 130.88 is the 1-to-1. If the news is good, 152.50, which is right in the middle of this gap down from, what is that, the 19th of July. So, again, fairly asymmetrical risk rewards. That is a little bit up, and maybe the odds are that that's where it falls, or $10, $15 down. Is that what? Yeah, it'd be about $15 down from here, back down to that 130 level for an ABC. Let's go back a little bit and see if there's anything else out here. You really don't have, that was kind of in the push back up. There's nothing really at the 137 level. Let's turn that off here for a second. Not really anything at the 130 level. There is something at about 134. So maybe you've got a little bit better support with a gap there. But to me, long term, if you break down here, even if it bounces around the 130 level, I suspect you've got 3 or 4 or 5 gaps right here at the 120 level. It actually gapped up on the, February 18th. And then you actually have to go back to other separate gaps. Gap down from the 9th of February and a gap down from the 15th of January in 2016. Those are all 2016 gaps, by the way. So this thing's been sitting on a gap for a year and a half now. And that's probably, that's a nice $4 gap that's been gapped over by 3 different gaps. That's kind of a big arrow out there saying that that is where long-term support is. Want to look also at the bigger picture out here, and that is from the October 18th low of 2016 to the high on February 16th, 2017. I had a 4.6 on the power vector number on the way up and a 5.6 on the way down. So not incredible selling, but brisk selling. This very light pop up from that August 21st low still suggests that at a minimum, you want this thing to test 139.13. And if you're long, I think you have to place the bet that way. Even if it popped a little bit today, I think you still have a test of the 139.13 coming. And then, of course, those multiple gaps out there with a year, maybe more, to the next big product. And no big signs that people are buying the Watson system. I think IBM has a tough road above it. And yeah, somebody in the den bringing up that there was Russian collusion. It was just in 2010 over the uranium deal. What else do we have going on here? Let's take a look at Nike. Okay. Nike may have made a short-term low. Of course, this thing blew up on earnings a little while ago, back on, what was it, the 18th? $50.79. June 16th. What do we have? You went below the previous low. You've done so from 25 million shares on June 16th to 16 million shares on October 12th. So you did that. Now you've got the bounce here. Energy is about the same on the way up as it was on the way down. So you don't really have any kind of edge out here. I guess you've got a light volume low for Nike. You'd want to see that one retested again with even lighter volume before I start looking at it. We got a couple more emails. We'll go through them before the end of the day, and maybe we'll get into it.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Wow!
Question in the den whether I think we could see, what is it? Where's it at? XRT, okay. If we could see Nike back up to the $60 range, and of course, you can always think that, but what I think you've got to have out here before you could even get into that preposition is a test in the XRT, which is the retail sector. Dick's Sporting Goods, when this thing's got hammered, DKS, I think you want at least some confirmation of a bottom in some of these, maybe Dick's, maybe Finish Line, any of these out here. None of them have really said that they've had some kind of bottom in. I think you could get $60 on it. I just don't know what's Finish Line. FIN, Finish Line, FINL. I mean, I think you want some of these associated companies to start looking a little better. Now, you had Finish Line kind of priced going out of business on its earnings on the August 29th. This thing has kind of made an ABC up. It's kind of pulled back to support. I think you want to see this and some other ones out here base out before you think that Nike's going to run. And even then, I mean, when people don't tend to buy these things other than at retail, and if they're not going to the Finish Line, they're not going to Dick's Sporting Goods, they're probably not buying a lot of tennis shoes, or let me put the people that are marginal about buying tennis shoes, or expensive tennis shoes, let me put it that way, probably a little different. So I'd look at all three of those. I don't see anything in those that says Nike has bottomed out yet. Anyway, we'll see you here tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to, in a market that's sideways.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.